Welcome to the Daily Business and Finance Show. Russia's space ambitions, nuclear weapons and satellite attacks, energy transfers surpasses EPS estimates but misses revenue mark. CDC eases COVID isolation guidelines. Lockheed Martin stumbles amid Biden's F-35 cuts. In the world of finance, Berkshire Hathaway parts ways with Stanico, D.R. Horton, and Markel stakes while Elon Musk reveals a whopping 20.5% stake in Tesla. Tech news sees NVIDIA leapfrogging Alphabet to become third-largest U.S. company, and Cisco braces for a fall with weak Q3 guidance and workforce cuts on the horizon. Stay tuned after this short ad break as we delve deeper into these headlines. The House Intelligence Committee has relayed to Congress a possible national security risk. This involves Russia's objective to position a nuclear weapon in space. The intended target of this weapon is satellites, not our planet Earth. A confidential meeting is planned with the leaders of Congress for further discussion on this issue. Switching over to business news, Boeing has been awarded an order from Thai Airways for 45 wide-body aircraft.
Energy Transfer reported its fourth quarter earnings per share, surpassing expectations by 3 cents and reaching 37 cents. However, the company's revenue of $20.53 billion was short by $970 million. There was an increase in the distributable cash flow, rising to $2.03 billion from $1.91 billion of the previous year. Looking ahead to 2024, Energy Transfer is projecting an adjusted EBITDA ranging between $14.5 and $14.8 billion. This could potentially mark a 7% increase from last year.
The Centers for Disease Control and Prevention intends to amend the COVID-19 isolation protocols, permitting those with mild symptoms to conclude their isolation period earlier. This move is in line with similar actions taken by Oregon and California, and corresponds with a notable reduction in hospitalizations and fatalities related to COVID. The updated guidelines are pending White House endorsement and are anticipated for public scrutiny in April.
The stock of Lockheed Martin experienced a 2.3% decrease in response to news about President Biden's intention to reduce orders for F-35 fighter jets by 18%. This decision is a result of a legislative limit on the defense budget. The cutback, which corresponds to a $1.6 billion reduction in spending, may affect defense programs and initiatives to restock weapon supplies for Ukraine and Israel.
In the fourth quarter of 2023, Berkshire Hathaway, led by Warren Buffett, withdrew its investments from StoneCo, D.R. Horton, and Markel Corporation. The company also reduced its share in Paramount Global by 1/3, which resulted in a 6.8% decrease in the stock's value. On the other hand, Berkshire Hathaway increased its holdings in SiriusXM Holdings, Occidental Petroleum, and Chevron. However, it lessened its stakes in HP Incorporation, Paramount Global, and Apple. The stakes for Bank of America and Coca-Cola remained unchanged.
Elon Musk now owns a 20.5% stake in Tesla, which is worth more than $120 billion. This value surpasses the total market capitalizations of both General Motors and Ford combined. Even though Tesla's stock has seen a drop of over 20% since the start of this year, its shares increased by 1.11% in trading after the market closed, following this announcement. Musk's goal is to secure a voting position of 25%, allowing him to shape the company's future in artificial intelligence.
NVIDIA, a prominent player in the field of artificial intelligence chip manufacturing, has now overtaken Alphabet, Google's parent company, in terms of market capitalization. With a closing value at $1.83 trillion, NVIDIA stands ahead of Alphabet's $1.82 trillion and Amazon's $1.75 trillion. However, it still lags behind Apple and Microsoft. In the span of the past year alone, NVIDIA shares have seen an impressive surge of 221%. The company is projected to announce its fourth quarter earnings per share at $4.56 on February 21st.
Cisco's stock value fell by 5% in after-hours trading, following the release of an earnings forecast that didn't meet expectations, coupled with the announcement of layoffs across the company. The technology behemoth is predicting third-quarter earnings to range from 84 to 86 cents per share, which falls short of analysts' projected 92 cents per share. In addition to this, Cisco is preparing to reduce its workforce by 5%, a move that will result in approximately $800 million in restructuring costs.
Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay inspired, and we'll catch you on the next wave of business news. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.